Hi there, I'm Mike Larson, Editor-in-Chief with Money Show, and I'm coming to you from the Money Show Las Vegas. Today I'm speaking with Adrian Manz, founder of TraderInsight.com. Adrian, how are you?
I'm great. I'm happy to be here at the show, and it's been really good so far.
You know, obviously I've been able to be at these shows for a long time, talk with you about how markets have evolved and how the trading world's evolved. Talk a little bit about your experience here. What kinds of things have you been talking about with attendees?
So primarily, folks have been focused on the opening trade. So a lot of people have been very interested, and we do a lot of first-hour trading. So Julie and I obviously are professional traders. We've been trading all day, every day for the last 30 years. But a lot of our guys, over the years, people who work with us, they like to focus on the open, or they like to focus on sort of the midday. They want the rest of the day freed up. This crowd here has definitely been skewed towards they want to trade the open either before they go to their day job, or they want to trade the open before they go to play golf, but they don't want to sit in front of a computer screen all day, every day, right? They want to just capitalize on that really good volatility.
Got it. And now, in terms of types of markets you trade, beyond stocks, futures, a little bit of everything, or?
So we trade, it's almost all stocks. We do trade futures, so we'll trade the NQ as a proxy for the QQQ, just so we don't have to tie up $500,000 of intraday margin, right, to trade the Qs. But we still, every trigger that we have in an NQ trade comes from analysis of a QQQ chart. Yeah.
Let's talk about methodology. I mean, what goes into your process, and what is it that when you're educating people on how to be better traders, what are some of the things you tell them?
So we're primarily order flow traders. So Julie and I started this business in 1996, right, when we were graduate students. And we were working with the New York Stock Exchange at that time, gathering data for a research project that we were doing as grad students. And our entire thing was focused on how can we go and gauge, at that time it was the specialist system, right? It was strictly specialist system. How can we gauge sort of where the order flow is going to be based on the personality of the particular guy who's managing a stock? Nothing much has changed over the years, even with the ECNs. Like every stock still has sort of a personality. So like the Magnificent Seven stocks or something that we trade a lot. Tesla has sort of an inverse relationship to the rest of the Mag 7 stocks during the day. We focus people on, all right, so now what you want to do is take each one of these, if that's what you're trading, and pick apart where the important order flow was. So we teach people to not look at so much momentum as look through this and let's see where, let's do a cluster analysis of volume and see where the important volume was in what just happened. And then go through and maybe do an anchored VWAP, volume weighted average price on a trend move, and see does that anchored VWAP line up with the volume cluster analysis that we did. Does that then line up with support and resistance? And if it does, that's a good place to have your trades sitting, just sort of waiting for the market to come to you, versus firing off 200 trades over the course of a day, right? So we do typically 10 or 11 trades over the course of a session, and we average usually about $8 to $10 per share of profitability over the course of the day.
Okay, and you're looking to be in and out within the same day, right? We're not
always, yeah. We're always out in the same day because, for us, long-term investments are real estate. Although, as you know, our house just burned down, so questionable thinking sometimes. But the shorter-term trading, if you've got money in an intraday trading account, you're getting 4-to-1 leverage. Overnight it goes to 2-to-1, and during the day we can really capitalize on that 4-to-1. So we never hold overnight.
Got it. Well, let's talk a little bit about the psychology of trading. I mean, how does that factor in when you're trying to educate people to be better and sort of know what their weaknesses are as a trader?
Well, I think it's everything. So it's we're both PhDs in psychology and MBAs, and I'll tell you that the psychology background is more important than the business background any day. And so we also we're doing this TV show before the fires and everything, and it'll probably turn into an online show at this point. But that whole thing it's called Trader Nation. It was all about just the psychology of individual traders. So it's not a market show. It's about the face of trading, so the people in the markets. And the first episode, for instance, was the gamblers. So we brought people in who had sort of a predisposition to gamble, and that's what brought them to trading. And then how do you overcome, because you're going to lose, right? If you're a gambler, you're going to lose money. So how do you overcome this desire that you have for action and go and just be a logic-based trader and still have something there that attracts you to it? And then, we just sort of work through the different personalities that we run across. We've got very conservative people. We've got very, people who know exactly what they did to earn that dollar. That's the mentality, right? So that's one psychology. People who are very much in tune with risk. People who are very good at following through on things. They're very conscientious, right? I mean, there's all these things about your psychology or what determine how you're going to do. And you really need to figure out before you make the first trade how you're going to tweak your psychology a little bit so that you're in tune with the kinds of things that actually happen in the markets.
It's interesting you bring up the sort of the gambling or gamification. I mean, versus when you started in this business and now, I mean, people may have a betting app right next to their trading app on their phone. And in some cases with prediction markets and things like that, you can essentially almost gamble in a financial account. What are your thoughts on how that's impacted people now versus maybe 20 or 30 years ago?
I think 20 or back then, right, it was the group of people who were looking to come into trading couldn't really afford to be gamblers because the commissions were like $80 a side, right? So you didn't look at this as I'm going to pop in and out. We had a guy at the boot camp that we did in Miami Beach, and he was profitable. He had made $1,000 in the first half hour of trading, but he was underwater because of the commissions that he paid. And I said, John, there's 5 bars on that 5-minute chart. How is it possible you made 500 trades in that 5? He's just banging the keyboard, right? Because he's a gambler. He's here. He's standing right there looking at us. And it's that predisposition, right, that you have to work around. You got to tell yourself, look, I'm not looking to make as many trades as I can because I see action. I'm looking for something that's logic-based and something that has a very high probability outcome versus you're getting in, you're hopping on the momentum, you're trying to shave 10 cents off, shave another 10 cents off, because what happens is they get lots of small gains because gains feel good, and they won't take the loss because losses feel bad. So the 10-cent gains are followed by like a $2, $3 loss, and that's why some of these accounts get wiped out. So that's what we try to sort of guide people around.
Got it. I know we're not going to get bogged down in big macro discussions or whatever, but this market, we just hit all-time highs, the S&P. We've seen things like gold that have done very well. Is that influencing the attitude of the people you're talking to? Are they taking too big of bets because the market's in a bullish phase, or no? I'm just kind of curious about that.
I think the traders, especially the guys here at the show, have had a really open mind about following the order flow and just keeping position sizing where it is. So, I mean, traders are pretty much pulling their money out of their accounts anyways, the profits, right? So they're working with a fixed lot size. So Julie and I are trading, we trade one lots, we're trading 1,000 shares, and we just never even think about, well, should we put more on, should we put less on, because we're trading a range of things over the course of the day. And that's what I try to talk to them about doing. And everybody sees the logic behind that. I don't know anybody here who I've spoken to who says, it's up so high, I've tripled my share size. What I've heard a lot of is, Karen Gibbs asked me here at the Money Show, well, what are you doing with all these new highs back in 2008? And I said, I'm shorting them. And she says, you're shorting them? And I said, yeah, we're shorting the housing sector because it's just putting in a lot of patterns that tell us it's going to move lower every day. And that's where we're making the lion's share of our money. So I think that's the benefit of trading, is you can just be nimble, keep your income sort of steady over the years, and just stay focused on what works.
I guess I want to wrap this up by saying if anybody's a beginner watching this for the first time, what are the first, biggest pieces of advice you'd have, 1 or 2 things you want to tell them?
Start very small. I think paper trading makes sense in terms of learning how to use a piece of software. It doesn't make sense, and I've never met an unprofitable paper trader, right? It doesn't make sense in terms of actually learning how to do the trades. Once you know the software, once you know how to get your orders off, you can do bracket orders, conditional orders, all that stuff. Get in there, but get in there with it. Don't put all your money in the account. If you're going to day trade stocks, do an account with maybe $30,000 in it. Know that your maximum risk is $5,000 and handle it that way. Just say, I'm not willing to lose my risk capital. And start small. Start with 50 shares. And just as you get profitable, just keep doubling your share size.
Awesome. Adrian, I really appreciate you taking some time out here. I know it's been a busy show for you. Congrats on all your success.
Thank you. Nice being here. Yeah.